Welcome back to Today Assess Report, your trusted source for the biggest updates in crypto and global markets. Today, we have a massive story developing around XRP, and this one is turning heads across Wall Street and the entire digital asset space. Institutions are stepping up in a big way, and XRP has officially been named a top altcoin pick by major players. Even more importantly, Grayscale has just confirmed there is massive institutional interest building behind the scenes. This isn't just social media hype or retail excitement. We're talking about serious money, serious funds, and serious long-term positioning. If you've been watching XRP closely, you already know the momentum has been building. But what we're seeing right now could mark a major shift in how institutions are viewing this digital asset going forward. For years, XRP has been one of the most talked about cryptocurrencies in the market. It has faced regulatory battles, market volatility, and waves of skepticism, yet it has consistently remained among the top digital assets by market presence. Now, the tone is changing. Institutions are no longer sitting on the sidelines. Instead, they are beginning to recognize XRP's potential role in cross-border payments, liquidity solutions, and blockchain-based financial infrastructure. When institutional investors start labeling an asset as a top altcoin, that signals more than short-term speculation. It suggests strategic positioning. These firms are not looking for quick flips. They are looking for assets that can survive market cycles and potentially become foundational pieces of the next financial system. The biggest confirmation comes from Grayscale Investments, one of the largest digital asset managers in the world. When Grayscale speaks, the institutional market listens. The firm manages billions in digital assets and provides exposure to cryptocurrencies for hedge funds, pension funds, family offices, and accredited investors. Their acknowledgement of massive interest in XRP is not something to overlook. Grayscale's research teams conduct deep analysis before allocating capital or highlighting specific assets. So when they emphasize XRP as a leading altcoin, it suggests that institutional research desks are seeing long-term value, not just short-term trading opportunities. What makes this even more interesting is the timing. The broader crypto market has been going through waves of uncertainty, yet XRP continues to remain part of institutional conversations. This indicates resilience. Institutions typically look for assets that can withstand regulatory pressure and market downturns. XRP's ability to remain relevant despite years of legal scrutiny shows durability. That kind of track record builds confidence among large investors who need stability and long-term viability. They are not chasing trends, they are building diversified portfolios. XRP being named at the top of the altcoin category signals that it has moved beyond speculation and into serious strategic consideration. Another key factor driving this institutional attention is utility. XRP is closely associated with real-world payment solutions and cross-border settlement systems developed by Ripple Labs. Institutions care about utility. They want to see practical use cases, not just theoretical value. XRP's design focuses on speed, cost efficiency, and liquidity management, which aligns with what global financial institutions need. When you combine utility with growing regulatory clarity, you create a foundation that institutions can justify investing in. This is not just about price charts, it's about infrastructure, and infrastructure is where long-term capital flows. Let's talk about what massive interest really means in this context. Institutional interest often starts quietly. It begins with research reports, internal discussions, and exploratory allocations. Then gradually, it becomes more public. When firms like Grayscale confirm strong interest, it suggests we may already be beyond the early research phase. There could be capital positioning happening right now that the retail market hasn't fully recognized yet. Historically, when institutional capital enters a market segment, it tends to increase liquidity, reduce volatility over time, and provide stronger price floors. That kind of structural support can completely change how an asset behaves during market cycles. It's also important to understand that institutions move differently than retail investors. They operate with long-term strategies, risk management frameworks, and regulatory compliance teams. If they are increasing exposure to XRP, that means legal assessments have likely been conducted thoroughly. The regulatory clarity around XRP in recent times has reduced uncertainty, and institutions thrive on reduced uncertainty. The less ambiguity there is, the easier it becomes for funds to allocate capital confidently. This shift may explain why XRP is being viewed less as a speculative altcoin and more as a strategic digital asset with defined use cases. Market psychology plays a huge role here as well. When institutions signal confidence, retail investors often follow. That can create a powerful feedback loop. Institutional buying brings stability, retail enthusiasm brings momentum, and together they can drive sustained growth. We've seen this pattern before in traditional markets and even in previous crypto cycles. The difference now is maturity. The crypto market is no longer brand new. It has infrastructure, custody solutions, compliance frameworks, and established asset managers. XRP, benefiting from this maturing ecosystem, could position it for a completely different growth trajectory compared to past cycles. Another aspect worth highlighting is diversification. Institutional portfolios rarely concentrate in just one asset. They build baskets. Being labeled a top altcoin means XRP may be positioned as a core holding alongside other major digital assets. That kind of placement increases long-term demand consistency. Instead of short bursts of speculative buying, you get structured allocation strategies. Pension funds and asset managers may allocate small percentages that translate into very large dollar amounts. Even a 1% allocation from a major fund can represent hundreds of millions of dollars entering the market. There's also the global angle to consider. XRP has long positioned itself as a bridge asset for cross-border transactions. In a world where international payments remain slow and expensive, solutions that streamline liquidity are extremely attractive. Institutions operating globally understand these inefficiencies firsthand. If XRP can help reduce friction in international finance, its value proposition becomes much stronger than simply being another tradable token. It becomes a tool, and tools that improve efficiency tend to attract long-term adoption. What we're witnessing may also signal a broader shift in how altcoins are evaluated. In the past, many altcoins were judged primarily on hype, community engagement, or short-term returns. Now, institutional analysis focuses on fundamentals, partnerships, transaction throughput, scalability, and compliance readiness. XRP checks several of these boxes. That doesn't guarantee price movements, but it strengthens its institutional narrative. Narrative matters in markets. Once an asset's narrative shifts from controversial to credible, capital flows can accelerate quickly. Retail investors watching this development should pay attention to the difference between excitement and confirmation. Social media can create excitement overnight. Institutional confirmation takes time, research, and risk assessment. Grayscale confirming massive interest suggests something deeper than trend chasing. It points to sustained analysis and strategic planning. That kind of confirmation often precedes broader adoption cycles. It doesn't mean overnight price explosions, but it does suggest stronger long-term positioning. At the same time, we have to acknowledge market risks. Crypto remains volatile. Institutional interest does not eliminate downturns or corrections. However, it can reduce the severity of long-term drawdowns by creating stronger support zones. When large funds hold positions, they are less likely to panic sell during minor volatility. That stability can change how future market cycles unfold for XRP compared to its earlier years. Looking ahead, the key question becomes whether this institutional momentum will continue building. If more asset managers follow Grayscale's lead, XRP could see expanded financial products, potentially more structured investment vehicles, and broader exposure across traditional finance channels. Increased accessibility often leads to increased participation. The easier it becomes for institutions to gain exposure, the more capital can flow in. What makes this moment particularly powerful is the symbolism. XRP being named a top altcoin by institutions represents validation. After years of debate, scrutiny, and volatility, major players are now recognizing its potential role in the digital asset ecosystem. That shift in perception can be just as impactful as technical upgrades or market rallies. Perception drives confidence, and confidence drives capital. So as we wrap up today's report, the message is clear. XRP is no longer just a community-driven project with loyal supporters. It is increasingly being viewed as an institutional-grade digital asset. Grayscale's confirmation of massive interest sends a strong signal to the market that serious players are paying attention. Whether you are a long-term holder or simply watching from the sidelines, this development is one to monitor closely. The landscape is evolving, institutions are positioning, and XRP may be stepping into a new chapter. Stay tuned, stay informed, and as always, thank you for watching Today Assessed's report.